done pretty well in 15 years. We just had the 15th anniversary of the white paper, right? October 31st. I always loved the fact that the white paper, which was completed obviously before October 31st, was released on Halloween, right? The day before Dia de los Muertos. And I just find that ironic. I mean, Satoshi had a sense of humor, right? And what I think is amazing, in 15 years, we've gone from zero, no adoption of the technology, no one even knew what the technology was, to your point, we hit 3 trillion. Today we're, $1.5 trillion. $1.5 trillion of value from a technology that is in its infancy.
So I think that adoption's being driven by a variety of things. I have a price model for Bitcoin, and my price model for Bitcoin is the price is driven by the monetary inflation in the fiat currency frame of reference. That's one part of it. If the currency is hyperinflating at 100% a year, you're going to see Bitcoin price in that currency going up faster than that, or at that rate. So that's the first driver, inflation, but it's a vector depending on the currency. The second driver is in this case the adoption of Bitcoin as a treasury reserve asset by the people and the institutions in the marketplace. So the more people that adopt Bitcoin, when you're a hodler, you've adopted it as a treasury reserve asset. People say, well, that's not using it. Of course that's using it. In fact, the single most important use of money is to adopt it as your balance sheet. If everybody on earth adopted Bitcoin as their primary treasury asset, it would go to $10 million a coin overnight.
I talk about this, there's the capability of something and there's the potential of something. So what is the capability of most 15-year-olds? It's not very high. I mean, we all love them. They're our kids. They're nice. And some of them are wunderkinds, but the average 15-year-old doesn't have a lot of capability. Their potential is amazing, okay? I show this picture of an 11-year-old LeBron James all the time. And I say, what would you pay for this guy's future earnings? Oh, you can't say that. That's like, I'm not saying you're buying the person. I'm saying, how much would you pay for this kid's future earnings? And at 11 years old, LeBron didn't look like anybody special. He looked like any other 11-year-old. He wasn't even that big. And people would say, I'm not paying for that kid. Oh, you missed a big, I would have paid a decent amount for that. But the capability of Bitcoin today and other assets in the ecosystem is solid. It's good. But the potential, unbelievable. I mean, Bitcoin will become the global asset settlement layer, right? Every asset in the world will ultimately settle down onto Bitcoin. I believe that, right? Now, does that mean there won't be any other tokens? No. Does that mean there won't be any other protocols? No, right? We have 5-ish, 6, 7 protocols that matter in the internet. And we'll probably have similar numbers in the, third generation of the internet, the spatial web. Actually, I met these interesting guys last week, and they wrote a book called The Spatial Web. And if you haven't read it, you should read it. And it's amazing. The difference between Web 2 and Web 3 is this idea of 3 dimensions and spatial connections and how networks work. And that's why it's so powerful, because exponential growth, like the 4 of us right here in this block, it's not 4 connections. It's my connection to Johnny, my connection to Mario, my connection to Abs, Abs to Johnny, Abs to Mario, Abs. So there's multiples of, it's an exponential growth. I mean, you can't blow it up, but in 2001, Amazon stock went down 94%.
That's right.
Went from $100 down to $6. Yep. Went down 94%. Now, here's the crazy thing. Amazon is a great analogy, because Amazon is a infrastructure. It's a technology. It's a network, right? Amazon What do they make? They don't make anything. They're not a company the way we think of companies. They don't make widgets. They take 46 to 51% of the revenue that you as a seller sell on their platform. Just let that sink in for a second. So if you sell something for $2, they get $1 of it.
Yeah, that's right.
For being the network that connects buyers and sellers. They are a search engine.
So
and the stock went down 94%. Here's the thing. It's been public for 27 years.
Yep.
Every single year, including this year, all 27, there's been a double-digit drawdown. The average is 31%, meaning on average, every year for 27 years, you lost a third of your money. When was the right time to sell? That would be never. Who bought it 27 years ago and holds to today?
Nobody.
There's 5 people in the whole world.
Yeah.
Jeff, mom, dad, ex-wife, and Bill Miller.
Yep.
Bill Miller, legendary investor, okay, big Bitcoiner. His cost in Amazon is 7 cents.
Unbelievable.
7 cents. He's never sold a share.
Yeah.
And because he believed in the technology. And the same thing is, we are 2024, right, which hasn't happened yet, is the beginning of the cycle that I've been talking about forever. 54 with the mainframe, 68 with the microchip, 82 with the personal computer, 96 with the internet, 2010 with the mobile net, and 2024 with the truth net, okay, the Web3, the internet of blockchains. That's the beginning. Mm-hmm. And if you go back to that 1998 chart, right, that was halfway through the beginning, right? 1996 was the internet. 2000, 4 years later, there's a bust.
Yep.
1958, there was a bust. 1972, there was a bust. You had a 4-year period. And then there's a bust. And in that bust, there was a cover story about the internet being dead. And Paul Krugman said it'll never be more important than a fax machine. And there was the picture of the little sock puppet from pets.com run over with tire tracks. And Mark Andreessen, right, the guy who invented the modern internet, because he invented the browser, which made it, you didn't have to be a tech geek to connect to the internet. He said all these ideas were right. They were just early. Now, early is the euphemism for wrong, right? You're just wrong. And ultimately, all of these ideas are going to be right. And everything we have is going to be tokenized. Everything we have is going to be settled on blockchains. Everything we do is going to be using micropayments of cryptocurrencies, all of it, but not tomorrow. And that's why it's such an exciting time to be an investor. And every time there's a correction, the right answer is not to run away, but to buy more.
Yes.
And if you don't know what an S-curve is, get the book, The Great Boom Ahead, this weekend and read it. It's an easy read. And the guy who wrote it, I like him. He's an interesting guy. All the books that came after it, they're not as great. Harry Dent. I mean, but this book, The Great Boom Ahead, is amazing, and it describes how an S-curve works. But what's cool about the chart that Johnny just showed is that first wave, that yellow wave. Tim Draper, who I think we'll talk about later, Tim calls it the IS curve. So you get this little I, this little mania around every new innovation, and then it peaks and it crashes, and then we get what's called the trough of disillusionment. And everybody's like, oh, down in the dumps, and oh my God, it's never going to work, it's never going to happen. And then suddenly, it just starts to ramp. And when you hit that knee of the curve, when you get from the early adopters to the middle majority, it takes 10 years to go through the first phase, right? To get the first 10%. That's a long time. 10 years is a long time. And you're just waiting and you're waiting and you're waiting. And the problem is you FOMO'd in at the peak of the eye and you lost some money. And that sucks. But you got to be patient and you got to accumulate and you got to average down your cost. And because ultimately that slope, that upward slope of the blue line is going to happen. And what I love about this is you could use that not just for the singular technology, but for money, right? So for 5,000 years, gold has been money, right? Money is an asset that exists in the absence of a liability. Everything else that we think of as money is not money, it's currency. Currency is backed by debt, controlled by governments. It can be devalued at the stroke of a pen. And that's what happens to every currency in the history of mankind. They all get devalued down to zero. But gold, for 5,000 years, has stayed the same. A single ounce buys a fine person's suit. From a suit of armor to Cleopatra's time, to a zoot suit in the 20s, to Savile Row. You go to Savile Row today, you plop down the equivalent of an ounce of gold, $2,000. What are you going to get? You're going to get a fine person's suit. Same thing for 5,000 years. Now, the problem with gold is it's amazing, except for two things. If I had a bar here, right, and I wanted to break it into 4 pieces to send to y'all, I'm in okay shape for an old guy, but I could not break that bar of gold. I just couldn't do it. Even if I couldn't stuff it in my computer to send it to you. But I hit a few buttons and I can send you Bitcoin like that. And all the Bitcoin in the world could fit right here. Now, I don't have any on my phone. Don't SIM swap me. People have tried. Don't keep it here. But it's portable and it's divisible. So for the next 5,000 years, Bitcoin. And so what's happening is you got a reverse S curve of fiat. It's going like this. And you got the S curve of crypto going like this. But the problem is in that blue line, inside that nice smooth blue line is massive volatility. Bitcoin goes to 100 and then it crashes to 2. Oh my God, it's a fraud. It's going to 0. Then it goes to 1,000 and it crashes to 200. Oh my God, it's a fraud. It's going to 0. Then it goes to 10,000 and crashes back to 1,000. Where's it today? It's not 0.
If everybody on Earth adopted Bitcoin as their primary treasury asset, it would go to $10 million a coin overnight. And then up from there. So adoption as a treasury asset is second. And governments can do it. Institutions can do it. Endowments can do it. Religions can do it. Families can do it. Corporations can do it, right? I mean, every entity with a treasury could adopt Bitcoin as an asset. And there's a degree, right? Is it 1% adoption, 5%, 10%, 50%, 90%, 100%? Obviously, the more adoption, the more power. So that's the second driver. The third driver is technology or utility, right? If on the day that Apple says we built a Bitcoin signing device into the iOS phone or the iPhone, and now you can use your iPhone and your Apple Watch, and your MacBook is a multi-sig setup, or you can assign multi-sig between 3 members of your family with family sharing or something. When they do that and they make it instantaneous and easy, then you're going to see a big surge in adoption of Bitcoin, right? Technology drives adoption, and then you'll see a big surge in the price. Now, technology is not the only thing that drives adoption. What else drives adoption? Hyperinflation, right? Fear drives adoption. So hyperinflation is a marketing campaign for Bitcoin. Inflation is a marketing campaign for Bitcoin. Also regulation. When the regulators say that Bitcoin is a commodity, an asset without an issuer, that drives adoption. When they actually approve a spot ETF, that drives adoption. When FASB approves fair value accounting, that drives adoption. So regulatory clarity drives adoption. Awareness drives adoption. Education drive adoption. Technology, it's more important that Apple adopt Bitcoin than it is that your mobile startup adopt Bitcoin, right? If Apple builds Bitcoin into the iPhone, that's more important than the fact that somebody that wants to launch the next WhatsApp built Bitcoin into their app. So the behaviors of Apple and Microsoft and Amazon and Google, they're just like nation states, really. If China embraces, China says you can own Bitcoin, right? The more of embrace from China, the more embrace of the EU, the more embrace of the US, the more adoption. So those are the 3 first order drivers, adoption, technical utility, and inflation. And then the second order driver is productivity growth of the people that have adopted it, right? In the extreme, and this takes you to the Austrian economics theory of sound money, if everybody uses our money, then the money, and if the economy grows its supply of goods and services by 2% a year, the money will get 2% more valuable each year, assuming the money supply is constant, right? So ultimately, it's not just about adoption, but like imagine the company that adopts Bitcoin also doubles their cash flows the next year, you see, right? So the productivity of the Bitcoin community will ultimately drive Bitcoin after we get through the first order effects. But the first order effects of inflation and utility and adoption, those things are going to dwarf every other factor. And all of these things are kind of a function of time, right? Right. One can say over time, information will spread, adoption will spread, people will build this into technology. Inflation is a function of time. So over time, you can say Bitcoin price is going up over time. The reason it's going up is because of utility, adoption, and inflation and productivity, because they're all functions of time. And, that's my view on it. And as you can see, the real big question mark is what will each individual do? What will each family do? What will each institution do? What will each company do? What will every executive do? What will every nation state do? Everybody chooses how rapidly and how enthusiastically they adopt this asset class, and they adopt this network, and they adopt this protocol. Right? Bitcoin it's an asset, it's a network, it's protocol, and it's an ideology. And it is defended by computer power, electrical power, economic power, and political power. And right now, it's growing at a very rapid rate. The computer power is 420 hash rate. It would take all the computers in the world to attack it. Electrical power is 12.5 gigawatts. The economic power looks to be about $550 billion if I calculate the basis of Bitcoin investors. That's how much money's been invested. You can get to that back of the envelope estimate if you just take the 4-year simple moving average and multiply by the outstanding supply, and that's a pretty good surrogate for, on average, what people have invested to buy their Bitcoin. And then the political power is 220 million people that own some of it, right? And I mean, that's Google's best estimate right now. I think it's growing by millions every month. I expect we'll be 1 billion sometime this decade. And of course, 220 million people with $550 billion invested don't want their money taken away. And that's what drives their political behavior, and that's what drives the network. So there we go. Most wealthy families, most wealthy investors I run into, they own real estate. And they own real estate in London and Paris and New York and LA and middle of Miami, places that people want to be. And the strategy for accumulating wealth is levered long property, right? If you really want to get rich, then you have to borrow a lot of money, buy something highly desirable, hold it for a long period of time, wait for the monetary inflation to drive up the value of it, right? You bought $1 billion worth of real estate in London, you paid 3% interest, it traded up 7 or 8% a year, and you're generating 4% yield on $1 billion every year for 10 years, and all of a sudden you've just made yourself hundreds and hundreds of millions of dollars, right? So that has been the only strategy. I think Bitcoin is now emerging as something superior to that. Bitcoin allows you to take on a strategy of acquiring scarce desirable property, but now you can acquire it in units of $20 at a time or $200 at a time. And so it's an egalitarian strategy for wealth creation or wealth preservation. The big catalyst here, I mean, the first one was, Satoshi's creation of Bitcoin, right? Put a big star on the map nearly 15 years ago, coming up in a few weeks, is the anniversary of the white paper. The second big milestone was the end of the block size wars, when Bitcoin was established, as this censorship-resistant network that's resistant to the meddling of corporate interests and others, and we sorted out what's the dominant chain, and a lot of theory and a lot of values got cemented in the block size wars. I think the third milestone is the entrance of is actually COVID and the entrance of corporations, right? COVID catalyzed corporations to look at Bitcoin. So without COVID, MicroStrategy doesn't do Bitcoin. And without MicroStrategy doing Bitcoin, probably the next set of companies don't do it. You don't get 24 Bitcoin holders, and then you don't get the accountants interested, and then you don't get fair value accounting, and then you don't get the clamor for the ETFs and the spot ETFs. So that was the next milestone. Then after that, the spot ETF will be the next really big milestone, because it'll be a high bandwidth institutional on-ramp for tens of billions or hundreds of billions of dollars of capital. And so that's really key. So, and then after that, the embrace of the traditional banking networks, right? The Deutsche Banks, the Santanders, other banks starting to custody Bitcoin and provide banking services. So all of those things coming together, they actually deliver digital scarcity as a fungible liquid asset to all classes of investors.